Hey everyone, this is Marshall, aka the ThetaTrada, and I just wanted to go over the upload schedule that I want to have for this channel. This week has been really a little bit off. I really wanted to get this channel up and running, and I didn't anticipate how hard it would be to edit videos, capture the audio and the video, and finding the right software to do it all, and just the newness of posting videos and things like that. It's just been a little bit overwhelming, but I really wanted to get this channel going and get everything out there and start getting information to you guys, especially since it's the new year. I just got a new brokerage, so I really wanted to just document everything right from the beginning. I expect that the quality will go up as time goes on. I'm sorry about the audio quality and things like that, but I got a new microphone coming. I'm learning how to capture my face, so you guys won't just be staring at a blank screen the entire time, and just different software, so I don't have to use it in the most literally basic way possible. So yeah, all that's coming. So to go over the upload schedule, some Sundays I'm looking at doing account reviews. This is going to look at trades from the past week, plus go over my watch list and what I think is going to come up for the coming week and what I'm looking to get into next. And then Wednesdays will either be some type of educational video or possibly a midweek review of how my trades are going, anything I've gotten out of or into. So during these weekly reviews, I'll be going over this spreadsheet that you guys are seeing right here. And just so you know, this is linked down below. Anyone that looks at the link can view this, look at it. There's even a way to copy it so you can put it into your own Google Doc. And this will actually be a good way that you can paper trade options if you don't have the capital yet or you just aren't confident or anything like that. You can enter in trades that you think you want to make just to see how they'll turn out and see if you'll be profitable in the long run and see if this is something that you actually really want to get into. Like I said, it's linked down below, and I'll literally be updating this with every single trade that I make. I basically update it every single day. If I make a trade, it's going to be on here. So yeah, so let me first start off by showing you what each one of these tabs means. So we got the totals down here. This is basically just going to summarize everything that's inside of these. I said in the last video, I really want to shoot for 2% a week. That is going to be this percent yield number, not this realized percent yield number. There may be some weeks where I don't actually get out of a trade and I just hold it and hold it and hold it, and then I'll sell. And then so sometimes you might see this like really crazy high realized percent yield, but then some days it'll might or some weeks it might even be zero. So this percent yield number is really the one that I'm trying to hit this 2% a week for. This CSP down here, this is going to stand for all of my cash secured puts. So I will say I'm not going to get super technical in how these trades are executed, how these strategies are going, or anything like that. This is strictly just going to show you what trades I executed, what went on, and what are my thoughts on each trade. Any knowledge-based things or like what a cash secure put is, what even is an option. I have these things down here, PMCC. You might be wondering what's that? Well, that stands for a poor man's covered call, also known as a diagonal spread. So any knowledge based things will come with educational videos. Sometime in the future, I'm looking to make a what is options video sometime really soon. So you guys will hear that. So you might hear a lot of terms in here that you aren't really familiar with, but please stick with it till the end because hearing these terms over and over is what's going to make you just a more confident trader and just increase your understandings of options in general, what it means to buy an option, what it means to sell an option, all kinds of that. So just stick with it till the end just to get those repetitions. It's all about time in the saddle with options. So just stick with it till the end, guys. So the CSP, like I said, is going to stand for the cash secure puts. And then I have each one of these is a diagonal spread or a poor man's covered call, which is a specific type of diagonal spread. So first, let's look at the cash secure puts tab. So let's look at some of the headers. I'll go over the important ones and kind of why they're there. So the first thing I put is the purchase date. This is just when I sold because these are cash secure puts. So these are when I sold the put. And then I have the expiration date. So this is going to be the expiration of the actual option. And this is good because I calculate the weeks till expiration based on this. And the reason that I want the weeks till expiration is because I want to know how much premium I'm going to get. And then I'm going to want to know how much expected percent return that I'm going to get per week from that. So this is going to be based off of G3, which is this 300 divided by H3. So this is the collateral I actually put up for the trade. So in order to collect $300, I'm gonna have to put up $3,000, which is pretty good. If someone told you, you give me $3,000 now, and in 6 weeks, I'll give you $3,300. I mean, that's 10% return in 6 weeks. That's a really, really good return. So that's definitely outpacing the market and everything like that. I also put things in here like the strike price that I sold at and the quantity. So you can see here I sold four of them at the 7.5 strike. I collected $300 in premium. We do some quick maths. I sold each one for $75 and I sold four of them, and that's how I got the $300. So that's how we get the expected percent return. Then I put the closed slash roll date. Some of these might go in the money. So say CVM actually did go below my strike price. I might want to roll that instead of closing it out. In this case, I should probably put a thing whether I actually did roll or to close it, but for right now, it's just this. So that way I can actually put my weeks actually in the trade. So you can see I literally got out of this 3 days later. This one I got out literally the next day. This one 4 days later, and this one I got out literally the next day again. So that way I have the weeks in the trade. This is the realized premium. So out of this 300, because your gains are capped when you sell puts. So out of this 300, this realized premium is going to be how much I actually collected from that 300. And then realized percent of premium, this is just this divided by this. And then realized percent return per week. So if I was only in the trade for 1 week when I was expecting six, like obviously I don't want to calculate it based off the 6 weeks. I only want to calculate it based off the 1 week. So that's where we get this realized percent return per week. And then I have notes and things like that on there. And over here at the end, I have the week and then the profit that I made that week, if I realized any profit. For the diagonal spreads, it's going to be basically the same as a cash secured put, but the only thing that's different is the collateral that you put up. So instead of having cash as a collateral, you're basically going to take this long position right here. So I bought a long call at on 111, cost me $5,000 for 40 strike, and it expires a year from now. So this is basically a leap, is what they're going to call it. So I bought a leap, and then this is going to be used as your collateral for these short positions down here. And the reason that I divided these up is because I really want to make, again, I'm shooting for the 2% a week, but I want to make sure that I can keep track of my long cost basis, because as I sell against this, if I actually realize all of this $330 in premium, then the cost basis of this isn't really 5,000. I could actually sell it to break even for $330 less than this. So I want to keep track of my long cost basis, and I also want to keep track of my break even stock price. Because if my break even stock price is $90, I don't want to sell a short position against this for less than 90 bucks, because then if my short call gets assigned and it has to use my long call as collateral and it's below 90 bucks, I'm losing money on the trade. So that's why I have it just a little bit above, just so I can collect, really good premium without actually selling at a loss or getting assigned at a loss. So again, this is like pretty similar to the cash secure put. I have my purchase date, the expiration, weeks till expiration, strike price, maximum premium that I could possibly get, and then expected percent return per week. Obviously, I'm still in this trade because there's no closed roll date or anything like that. Like I said, I will be updating this literally as I do it. I think there is some data in here. Yeah, so if we look at this one, I actually realized $69 of this 119, which was 57%. I actually got almost 4% of my money on that one right there. So let's just go over what are my thoughts on what I did the week of 111. So the reason I got out of this one right here is because this is CVM. I really know nothing about CVM. They're a pharmaceutical stock, which are crazy volatile, and I don't like getting into them, but the implied volatility was really, really good, and the premium, obviously 10% of premium, that's like That's crazy, crazy good. So the reason I didn't know much about it, and so I realized, so I just kind of figured that 70 bucks, I realized 23% of the premium in less than a week. So I was just like, I'm just gonna get out, free up this collateral, and I think I used the collateral to actually get into this GME put right here, because GME the week of 111 it basically went parabolic. So I wanted to get out of that and just free up the collateral and just sell more puts against GME instead of being stuck in this CVM put for another 5 more weeks. So that was the reason for that. Riot again. I realized 81% of the premium in just a few days. This was the only one that I had expiring at the end of the week. So the reason I actually got out instead of just waiting for it to expire is that I didn't want the stock price to go down and get into it, get into my strike. So realizing 81% of the premium, I mean that's pretty good. Still hit my 2% number. And I mean if we look at Riot now, I mean they're down 12% just today. So that was one of the reasons for selling is because, I could have waited 3 more days to realize, let's see, 78 and 96, whatever the difference between that is, like what, like 210, just a few bucks, it's not even that much money, just for the chance that Riot will go down and get into my strike price and something bad could happen. So really don't want that. Accidentally just typed a 5 in there. That kind of sucks. Uh, INO. Basically, there's not much to say about here. This here, again, realize 65% of the profit. Why wait another 3 more weeks just to get another 35%? No reason for that. I would just got out, free up the collateral, use it for something else. GME put, again, realized 50% in literally just a day. Let's get out of that, free up that $3,600. Let's use it for something else. For, let me just think, for the diagonals, the reason I got into the diagonals, so anytime you want to get into a diagonal spread, all of these I'm long-term bullish on. GME is all anything Wall Street Bets can talk about right now, really. Workhorse is pretty much the only ones making last mile electric vehicles for things like USPS and things like that. They actually have a contract coming up with USPS that I really think they're going to get. Fastly is a cloud company. I'm really long-term bullish on them. Palantir, not super knowledgeable about them, but I know that again, it's all Wall Street Bets can talk about is Palantir. So if Wall Street's Bets bullish on them, I'll be bullish on them as well. Why not? So now that that's all done, let's go over the positions that I'm in now, what I'm thinking about doing with them this week, and yeah, let's just go over that. So if you look at my account now, this is the Fastly diagonal spread. We kind of already went over this, so there's nothing really to talk about there. GME, these two were the diagonal spread for GME. I did sell a put, which is new. This put's doing actually really well. I sold it for 305 and it's currently worth 117, so I have made the difference on that, which is $187.50. I will most likely end up holding this GME put until probably right up until expiration. I think that this is solid. I don't think that GameStop is actually going to get below $28 really anytime in the future. You will see that this $30 call that I sold against this $10 call is losing a ton of money. And that's because I sold this when, like, the day that GameStop basically went parabolic. It just blew past my strike price literally within the first day. So I've made $1,500 on the long call, but I've lost $992 on the short call. So overall, we're up $732 on GameStop alone, which you can see that right here. So I'm not too worried about it. I'll probably end up rolling this short call out. I probably won't be able to roll it out of the money, which is kind of sad, which is something that I want to do, but I definitely do not want this short long call called away because I want to keep that long call for as long as possible to reduce the cost basis so eventually I can get shares for pretty much for free. I do want to talk about this Fastly a little bit more because you'll see that the stock price is actually trading at 97.90 right now. When I sold this short call against it, this is similar to the GME call down here. When I sold the short call against it, Fastly was trading at around $80. I had no idea that Fastly was going to go up $15 in just a few short weeks. So it's similar to the GME where I'm making a ton of money on this long call, 962 bucks. Oops. But I'm losing money on the short call at 297. Again, I'll probably wait until close to expiration sometime next week. Probably when this only has 2 days left until it expires, and then I'll probably roll this out. I'm pretty comfortable with rolling this out to a $105 strike. Uh, I think if it does hit 105, I will probably just let this get called away because I think that 105 is a good I think that's a good price to just let this get called away and then wait till the stock price goes down again, and then I'll probably enter in another diagonal on Fastly. So let's close these two out. Palantir, honestly, not doing too much. I'm losing money on my long call actually, but I'm making a little bit money on the short call. This is really a long play. I don't expect to make, anything like GME or Fastly where I'm making $1,000 on the long call, at least not anytime soon. This is really like a play for 6, 8 months down the line. So I'm not too worried about it. I'm just going to keep on selling short calls on it. I can make $102 on the short call in another in 9 days. So I'm just going to keep on selling calls against this 12.5 long call and just see where that goes. Workhorse is doing pretty well, but after hours today, the stock did drop pretty drastically. Let me show you guys that right here. If we go to Workhorse right here, I mean, just after hours here, it went all the way from, 23.50 basically. I mean, at its lowest, it was 21.22, but now it's at 21.95. So that's pretty bad for me because I have basically 400 shares on the line, 100 of them at $22 strike and 300 of them at the $23 strike. So basically, I have like almost 10 grand that can possibly get assigned, and I don't want that at all. Luckily, I'm close enough that I could probably roll these out a month ahead, still roll it out for a credit, and yeah, I'm not too worried about this trade. I'm pretty sure I'm going to get most of the premium from this. I'm almost definitely going to get all the premium of this. This one's only 80 bucks, but I'm just squeezing out whatever I can from this long call right here. So I don't think I'm going to be doing, so just to recap, I don't think I'm going to be touching too many of these options this week. I think all of them, I'm just going to let the theta do its thing, let everything decay off, and probably beginning to mid next week, I'll probably start selling some of these, start rolling my positions, and I'll keep you guys all updated on that. Yeah, so I think I've been talking for a pretty long time now. You guys are probably sick of hearing me, so that's probably where I'm gonna end it. Next video I make will probably be basically just a what are options video, just like a little educational video, and then I'm hoping to get my schedule down. You know, I really want to do these account reviews on Sundays, and I really want to put up either an educational video on Wednesdays or a midweek account review. So just in case I do any trades. Oh, also I linked to a Twitter that I just created down below. If you could give that a follow. Just like with the spreadsheet, I'm gonna be literally posting all of my trades there live. So if I get out of a trade, if I enter a trade, anything like that, they'll all be posted there. How much collateral's on there, everything like that. So I'm gonna be using that to also keep in touch with you guys, so you guys don't have to, pull up this spreadsheet every second of every day. You can just get a notification on your phone. Just in case you want to copy my trade, I will say this is all for educational purposes. I'm not a financial advisor or anything like that, but if you do decide you want to copy my trade or anything like that, I have been pretty successful. Maybe you copying my trade will, I don't know, hopefully make you money because I want to make money too. So, yeah, with that, I think I'm going to end the video and I'll see you guys in the next one.